Good morning, ladies and gentlemen, and thank you to the European Fund and Asset Management Association for inviting me to speak here today. I've been in the role of Commissioner for Financial Services for just over a year, and most of my speeches have been virtual, just like today's. It's a reminder that when it comes to this pandemic, we're not out of the woods just yet. Markets remained relatively stable this year. A strong vaccine rollout in the EU has allowed much of our economy to reopen, and we can see the green shoots of recovery. But as case numbers start creeping up again, we should remain vigilant. And as we enter the next stage of the pandemic, whatever it may hold, we should think about how to harness the power of the asset management industry in the European Union. The industry can direct financing towards opportunities that will allow us to build an inclusive, green and digital Europe. So I'd like to use my time here today to share how the Commission wants to help make this happen. So first, we need to work towards a truly single market for capital across the EU, the Capital Markets Union. With the Capital Markets Union, we want to break down the barriers between national capital markets, and we want to foster the role of capital markets in supporting the economy. Capital markets are vital to the economic recovery from COVID-19, providing alternative sources of funding to banks. Companies may need to access equity or other alternative capital market financing tools. For asset managers, a more integrated market would allow them to operate more efficiently and deliver better results for their investors. And I want to be really clear, the Capital Markets Union is not just a goal in itself. It also acts as an enabler, bringing benefits to Europe's economy and society. If we want the economy to keep up with digital innovation and meet our net zero commitments by 2050, we need private investment to complement public spending. So the benefits of well-functioning, deep and integrated capital markets are many, and we are heading in the right direction. We kicked off the CMU with an action plan in 2015. Followed by a mid-term review in 2017. And the Commission has completed what it set out to do in both. And the European Parliament and Member States have agreed on 12 of 13 legislative proposals. On top of that, new CMU indicators show early signs that our capital markets are indeed changing for the better. But given the challenges facing the financial sector, the pandemic, rapid digitalisation and climate change being top of the list, the Commission took a step further in 2020 with a new CMU action plan. And later this month, we will deliver on a number of our commitments in that new action plan. The first part of the package that I want to mention will be of particular interest to everyone here today. It is our proposal to strengthen the Alternative Investment Fund Managers Directive. IFAMA's own research shows that the alternative investment fund market has a net asset value of €6.7 trillion. Overall, the directive has contributed to an internal market for alternative investment funds, more effective supervision, greater transparency of fund activities and better investor protection. But there is room for targeted improvement. Our first goal is to facilitate the creation of an internal market for loan originating funds. Funds that originate loans provide financing for EU companies as a viable alternative to bank lending. While this market segment is experiencing a significant growth, these funds operate under varying national rules. Our proposal should contain some harmonising measures for loan originating alternative investment funds. While these targeted amendments, loan originating would be subject to the same safeguards across the EU to ensure financial stability, while allowing managers of those funds to operate across borders. We will propose liquidity management tools to better facilitate liquidity risk management by managers of open-ended alternative investment funds. To ensure national and EU authorities can access the data they need and alleviate the reporting burden for funds, we want to ask ESMA, in cooperation with the ECB and national authorities, to work with Member States on supervisory reporting. We will also put forward measures to make sure smaller fund markets can access depository services, which will also help lower costs. We will put forward some changes to the delegation regime to clarify certain provisions and increase the transparency of such practices, while recognising that delegation is an important tool. And we will update the Undertakings for Collective Investment in Transferable Securities Directive, UCITS, to reflect changes to the AIFMD where needed. The second part of the package will be a proposal to amend the European Long-Term Investment Funds Regulation. With this, our aim is to help channel financing to long-term investment projects, which is particularly useful in areas like transport, social infrastructure and clean energy. There has been a recent increase in assets held by LTIFs, but the overall asset base remains low. We're considering three main changes. So first, we want to make a clearer separation between LTIFs for professional investors and those marketed to retail investors. We want to make the fund rules for LTIFs marketed to professional investors more flexible, which will make them more attractive. Second, we want to remove some of the barriers to retail investors investing in LTIFs. For example, we're considering removing the maximum 10% exposure requirement and the minimum €10,000 investment threshold, while at the same time we want to keep the same high level of retail investor protection. We will maintain strong, effective protection and introduce a cross-reference to the MiFID II suitability test. Third, we're considering the possibility of an optional liquidity window mechanism to provide extra liquidity for LTIFs without the need for a drawdown from a fund's capital. This could facilitate a secondary market and offer a partial liquidity solution for investors. The third part of the new CMU package will be changes to the Markets in Financial Instruments Regulation, MiFIR. With this review, our goal is to make the European financial system more competitive and to ensure a level playing field between trading venues and investment banks. A key part of this review is improving market transparency by providing an overview of markets by creating a consolidated data tape. It will allow all investors, from professional brokers to asset managers, to trade wherever they get the best price and the best guarantee to complete their transactions. I'd like to thank IFRMA for their continued support for this project. The fourth and final part of the CMU package is a proposal for a European single access point. We want to establish a single EU-level mechanism to provide users with seamless access to data publicly disclosed by companies, including financial and sustainability-related information. By facilitating access to comparable information, ESAP will give European companies, particularly SMEs, better visibility across the EU and help them connect with new investors, such as asset managers. It can also make our capital markets as a whole a more attractive place to invest. It will improve transparency and address data fragmentation across the EU. And by providing access to sustainability disclosures, ESAP will contribute to the European Sustainable Finance Agenda. By enabling the use and reuse of data, the ESAP will also contribute to the Digital Finance Agenda. So this is a big, ambitious set of proposals coming before the end of the year. But we're not stopping there. To support the CMU, we want to encourage retail investor participation in EU capital markets. So one of our top priorities next year will be our retail investment strategy. And right now, we're laying the groundwork for this strategy. We're gathering views with an open mind on the way forward. I know that this is something IFAMA is following very closely, and I look forward to hearing more from you as we progress. We look at the entire length of the retail investor journey, identifying any weak points and ensure that rules really work for investors. We want to look at both the opportunities and the challenges that technological innovation presents. And we will look at ways to help retail investors make more sustainable choices with their money. Of course, a big part of that retail investment puzzle is financial literacy. If we want citizens to invest in capital markets, they need to understand how the financial system works and how to make the choices that work for them. Levels of financial literacy vary from country to country in the European Union, and unfortunately, it is the most vulnerable groups that are disproportionately affected. So I'm committed to doing what I can to improve the situation, and the Commission will work with national governments to increase levels of financial literacy. Today, more than half of EU governments already have a financial literacy strategy in place. The Commission is partnering with the OECD and its international network on financial education to develop a joint financial competence framework. And this is about creating standards that are commonly used and recognised across the EU. This will be available for national governments or local councils, charities, educational organisations, businesses, banks, and this will help them to develop policies and tools. If we want to encourage more people to invest in capital markets, they need to understand the risks and rewards of retail investing and the various options available to them. So to conclude, I know that European assets under management, net assets of investment funds in Europe, total fund ownership in Europe are all going up, and we want to support these positive trends. The Commission wants to put EU rules in place that help asset managers benefit fully from the Capital Markets Union and to help them put that investment to good use. Helping the fight against climate change, supporting innovation, enabling digital transformation, we can pursue all those goals better with the Capital Markets Union. Thank you for your attention.